Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. It's an exciting time to be invested in Japan. Despite recent volatility, it has been a landmark year for Japanese markets, with the Japanese stock market hitting a 34-year high in February. This has been driven by a range of governance reforms, as well as a move away from a deflationary environment. With the Japan and Japanese smaller company sectors trading at a 10% and 8% discount respectively, could now be the time for investors to take a look at the world's fourth largest economy. Today, I'm delighted to be joined by three managers from the Japan and Japanese smaller company sectors. Richard Aston, Portfolio Manager of CC Japan Income and Growth Trust, Masaki Tasetsumi, Fund Manager of Schroeder Japan Trust, and Paul Folks Davis, Chairman of Rising Sun Management Limited, which advises Nippon Active Value Fund. Right, on to the questions. What are the drivers behind the rally in the Japanese stock market over the past 12 months? I'm going to kick off with Richard.
Great, thank you, Annabel. I think that the drivers are actually very consistent, and they've been very important in driving the market over the last few years. First is valuation. Japanese equities historically had traded at a fairly significant premium to global equities. The derating of 10 years ago really left them at comparable valuations, or in many cases, more attractive valuations, the international peer group. Secondly is the commitment to reform. And I think the period over the pandemic has really demonstrated very clearly that companies in Japan and Japan in general is committed to the reform and restructuring goals established by former Prime Minister Abe. And finally, a reassessment of the growth outlook. And I think there are a number of very, very exciting developments that enhance the growth outlook in coming years. The first is a shift from deflation to inflation. Second, the geopolitical fallout and a reorganizing of global supply chains is really benefiting many, many Japanese companies.
Thanks very much, Richard. So three main factors. Masaki, what's your view on this? What's driving the rally?
Yeah, I think there are two drivers for the last rally for the last 12 months. One is inflation. Another is corporate governance improvement. Inflation is a positive for the corporate earnings because now Japanese corporation can grow the revenue and the earnings through the combination of both volume growth and price increases, rate of which was absent for the last 30 years of the deflationary era. So inflation is a positive for the corporate earnings prospect. And in terms of corporate governance improvement, that's a positive for the valuation. So for the last 10 years, thanks partly to the corporate governance improvement, return on equity, ROE of the average Japanese corporation has been more than doubled from 4% to more than 8%. That's a positive impact for the corporate overall equity market valuation. So inflation drives the corporate earnings growth, corporate governance improvement leads to the devaluation for the Japanese equity market. I think that's the major reason for the last 12 months rally. Yeah.
Thank you so much, Masaki. That's actually a very clear explanation. Paul, have you got something to add about this?
Only that this is somewhat coming. I mean, the Japanese market has been demonstrably the cheapest developed market in the world for many years. And there have been several false storms when people thought that it was going to start to improve on a sustained basis and hasn't made it. This time, we think is different. Both Richard and Masaki have touched on why. Principally, the corporate governance reform program is coming from someone who is the largest investor in Japanese equities, and that is the government itself, Japan Inc., in the form of the Ministry of Finance and the State Pension Fund. And as such, there's a tremendous sort of wind at the back of corporations to improve their capital allocation and all that all of us as managers are trying to promote. Inflation, of course, has started to become a factor, but largely after the rally began. I think perhaps the one thing that hasn't been mentioned so far is a reorganization of international currency flows out of China, because there is a clear decoupling going on in terms of US dollar and European investment processes out of China, and they need somewhere else to go in Southeast Asia. They're going into Japan because it is such a good value market.